Bank of America reported earnings, Morgan Stanley reported earnings, and Sofi got clearance for a bank. What a day. Hello everyone, welcome back to the channel. Today we're going to talk about Bank of America earnings, Morgan Stanley earnings, a little bit more about financial stocks in the financial industry, Sofi stock that is up today massively, and more. If you're new to my channel, welcome, but let's get started. Now we can see that certainly the stock market today is down again, as the Dow Jones is down 0.96%, the S&P 500 0.97%, and the Nasdaq down 1.15%, and the Russell 2000 1.60%. So as I said yesterday in my yesterday's video, I don't see this stock market reversing anytime soon if we continue seeing this kind of news about the interest rates and the 10-year treasury yield going up, which today is down, as we can see, is a little bit down, but yesterday it went up a lot and got to 1.87, almost 1.88, and now that it is down, it's kind of a good news, but we have to wait and see if that downtrend continues. As we know, as I said yesterday, this is basically investors anticipating a more aggressive reaction from the Fed within the coming months, and obviously that is not something investors like, as that will affect companies' profit and our investments as well, as it has been happening. But on another note, this morning we had Bank of America, Morgan Stanley, ASML, United Health Group, P&G, US Bancorp, and more. But then in the afternoon today, we also saw or are about to see Alcoa, United Airlines, Discover, Wintrust, and more. But let's talk about Morgan Stanley and Bank of America first, and then about Sofi. What is going up with Sofi today? Now, Morgan Stanley reported earnings this morning, and their shares rise after the fourth quarter profit tops estimates, which in comparison to JP Morgan, Citibank, and Goldman Sachs, they did see a profit increase in comparison to the competitors. They were able to beat analyst expectations with their earnings of $2.01 per share in comparison to the $1.91 per share estimated by analysts, but they missed analyst expectations on their revenue of $14.52 billion, and analysts were expecting $14.6 billion. Now, as I said, unlike its rivals, which disclosed soaring compensation costs for Wall Street personnel in the quarter, Morgan Stanley kept a lead on expenses. The bank posted $5.49 billion in compensation expenses, essentially unchanged from a year earlier and below $5.98 billion estimated of analysts surveyed by FactSet. That's a stark contrast to Goldman Sachs, where pay costs surged 31%, and also with JP Morgan and Citigroup. Investment management also topped estimates, rising 59% to $1.75 billion, and analysts were expecting $1.66 billion. Meanwhile, wealth management revenue rose 10%, essentially matching the $6.28 billion estimated. JP Morgan and Citigroup each reported the smallest earnings beats in the last 7 quarters, and Goldman Sachs missed estimates for fourth quarter profit because of elevated expenses, but Wells Fargo had been the sole bright spot in bank earnings after it gave targets for higher interest income and lower expenses, which Morgan Stanley as well had an increase in profit just like Wells Fargo. And that's why the stock is actually up 1.60% today, but we can see that it's actually up 27% in the past year. I know that it has been dropping. In the past week, it dropped about 11%, but it was mainly because they saw how Wells Fargo reported earnings, JP Morgan reported earnings, Citigroup and Goldman Sachs reported earnings, and analysts and investors actually reacted because of those earnings that were not that good. Only Wells Fargo did good in comparison to the others, and stocks dropped, but now we can see that it is recovering after their own earnings. Now, from Bank of America, we can see that Bank of America tops profit estimates on better than expected credit costs as well. just like just like Morgan Stanley. They reported earnings of 82 cents per share versus 76 cents per share estimated by analysts, and revenue of 22.17 billion, missing analyst expectations by a little bit of $22.2 billion. The second biggest US bank by assets said that credit quality improved during the quarter, allowing it to release $851 million in reserves and a book nearly $500 million benefit after $362 million in charge-offs. The bank said it was the lowest loss rate for loans in more than 5 decades. That's a good sign. Obviously, they got benefited, or they were benefited because of this release of $851 million, just like Wells Fargo, but they did not see an increase in expenses, just like JP Morgan, Citigroup, and Goldman Sachs. The bank's end wealth management division posted a 16% increase in revenue to a record of $5.4 billion, held by raising assets management and brokerages fees. Bank of America said that non-interest expenses rose 6% to $14.7 billion on higher pay for its workers. Just like with other banks, we already know this wage inflation going around in Wall Street, and it is also affecting Wells Fargo and Morgan Stanley and Bank of America, but these three banks did not see that huge of an increase in expenses in comparison to JP Morgan, Citigroup, and Goldman Sachs. The bank said in slides released Wednesday that it expects non-interest expenses in 2022 to be roughly flat by the 2021 figure, which obviously is a good sign. That's in stark contrast to rival JP Morgan, which said that it expects expenses will climb 8% this year. So again, Bank of America is doing better than the other banks. Not like, it is kind of the same with the Wells Fargo, but not like JP Morgan and Citigroup. You guys know that I always try to compare the 4 biggest banks in the United States, which are JP Morgan, Citigroup, Wells Fargo, and Bank of America. And I normally do a video comparing all of them in a single video, comparing their valuations and everything to find out which is the best investment right now, just like I did with the FANG group of stocks, which the winner was Facebook and then Alphabet. Now, shares of Bank of America have climbed 4% this year. As we can see, it is up 0.39% today, but it is still up 43% in the past year, as in my opinion it is a little bit high at this moment. Now, something huge that happened today for a certain company, not for the whole stock market, but for a certain company, is that Sofi gets regulatory clearance for bank charter. The stock is surging. Obviously, the stock went up today 17.68% because of this news, which we know that Sofi was originally focused primarily on student loan refinance. Sofi has expanded into a host of other financial services products. The company went public on June 1st via a merger with the special purpose acquisition company previously known as Social Capital. Now, we know that Sofi has been growing a lot and have been expanding a lot, and they were expecting or waiting for this clearance to happen, to this regulatory clearance to happen, as this is a huge milestone for them. As they said here, this incredible milestone elevates our ability to help even more people get their money right and realize their ambitions. With a national bank charter, not only will we be able to lend at even more competitive interest rates and provide our members with high yielding interest in checking and savings account, it will also enhance our financial products and services, which in my opinion, this is huge, because we know that Sofi has been waiting for this a lot and have been working hard to expand as a bank and grow even more as a company. And we know that they are a big or a very nice fintech company that have been around. And I told you guys that I don't invest in this company right now, but it is a company that certainly have my attention, and I have been tracking the company as I believe that it has a lot of potential long term. And I know that I have said that below $15 and even $14 is a buy for me. I'm currently not buying because you guys know that I don't like to buy when it's up this much in a single day, but we can see that the stock is actually down 38% in the past year. Because to be honest, I didn't like this stock at $23 per share. I would prefer below $15 or $14 per share, just like right now. But but I'm not buying because it is up this much. Now, I'm also not buying because I'm balancing my portfolio and I already have kind of a balance between growth, non-profitable, and risk investments in comparison to more stable investments. But I do have to say that this is huge for this company and this will open a lot of doors for them. If you are investing in this company, congratulations, because this is great news. Obviously, I understand that the stock is down a lot and this 13% up today is nothing in comparison to the drop that this company has been having in the past year. But still, I believe that this is huge. Now, let me know in the comment section below if you invest in Sofi, in Bank of America, and Morgan Stanley, and what you think about their earnings and the news about Sofi. Thank you and see you next time.